No, it's just following on from what Sue was saying, actually, about explaining things. I think, in previous kind of jobs and things I've had, I've done quite a bit of training on kind of explaining things to people. And Martin, you are obviously a complete expert, and everything you've just said makes all perfect sense to you. But I think, as Sue mentioned, some of us will have been going, huh? So I think, if Sue is giving you a hand and kind of put it, I think the training I used to have was, anything you say, you need to make it so that an 8-year-old will understand. Not that easy when you're talking about finances and investments, I know. But yeah, I think if you're going to be kind of making sure the public are aware of what's going on, I think, it's a really good point that it needs to be kind of explained clearly, which you have done. But yeah, just so that people understand what's going on, I think really, really important.
Okay, so we'll take it forward with Paul, Bob and Sue, and we'll come back in the not too distant future and work up this proposal in some detail. The investment policy, there's a couple of points on there that need to change. And investment policy is pretty good. I mean, what it says is that you have to observe the local government principles of liquidity, security and yield. In that order, they need to be secure and liquid, and then yield comes, or investment return comes once those security and yield have been dealt with, which is what we're trying to do. However, it constrains us a bit. It says currently that you have to invest with UK high street banks. Now, you won't get any investment return from UK high street banks. So what I was proposing is that we change the wording on that to say that adopt a policy whereby surplus funds can be invested in short-term deposits with one or more UK banks or building societies or money market funds, not limiting ourselves to UK high street banks. So I don't know if we can sort of...
That's probably a good thing, as most UK high street banks are owned by multinational companies.
Yeah.
Santander, HSBC.
And there's less high street banks than there ever were, because what is a high street bank in the current environment when you've got online banks and challenger banks? So I think
there's so many different...
Yeah, that's just a hang away. That's just a hang from the past, isn't it, really?
So I propose that Clause 3.3 is amended to remove UK high street banks and say UK banks or building society or money market funds. Higher rates of interest are available from offshore branches of UK banks. So there is a question of whether we would wish to include, it says UK, offshore branches of UK banks. That is a bit contentious because they offer higher rates because they pay less tax through the offshore branches. It's not illegal, but
I wouldn't be happy with that.
I would have to say.
Everybody remembers Iceland, I think.
Yes, yeah. To say you probably would not be happy with that, so it's probably proven.
Yeah, I think we should explicitly, exclude offshore. We're not into tax. I mean, whatever your view is, we're not into offshore banking.
I think optically and responsibly that's.
Yeah, I think so. Not for a council. Really.
Yeah, and I think for a council of any size, you have to be very aware of that it is, public money used for the public, and so you have to put it in somewhere safe. Rather than
many local authorities do put it. I mean, you're talking about in the Guernsey branch of HSBC or the Guernsey branch of, they all have their offshore branches. But whether we would get some higher rates, not dramatically higher by doing that. But I think what I've heard is you prefer to stick with a UK deposit, which falls within the UK.
Yeah, under the whatever the FSA regulations in the UK, I think that's what we need. Well, there's probably a definition, isn't it? So.
There is. I mean, the offshore branches are not necessarily regulated in the same way as
Yeah, they can't.
So we're not proposing to expand it to include offshore branches of UK banks. It does have to be with a UK bank deposit institution, which is covered by the UK banking code. The only other change was just to again broaden it to say we will only invest. This is no change. You will only invest with high credit quality. That's A-rated or above institutions. I think is right. Go below that, but to broaden that to include money market funds, so we could invest in a UK money market fund. I'll explain what that is. The UK money market fund is a fund that itself invests in numerous other investments, deposits, so it spreads the risk. You invest in the fund invests in 1,001 deposits. You have a small share of that fund with other fund holders, and there are UK money market funds that are AAA rated, so they are arguably more secure than making a deposit with a single institution.
Can I just, I would say to put a spanner in the works, but I don't mean to.